Welcome back. You're watching the Small Cap Portfolio. Still with me in studio, Samantha Steyn from Cannon Asset Managers. In this half of the show, we're going to be discussing OneLogix. Market cap just shy of 850 million, price earnings of 8, dividend yield around 3.7. Founded and listed in 98. Coincidentally, Adapt IT listed in 98. Coincidentally, not a fun year for the South African stock market. The emerging market collapse and all sorts of worries out there. OneLogix, they bill themselves as local cross-border auto logistics. I think they saw themselves a bit short in that. I mean, they're correct, but they're a specialist logistics provider, really. You're driving down the N3 to Durban, you see those trucks with a whole lot of fancy cars on the back. That's usually going to be OneLogix.
Exactly, and as long as there's cars on the back and it's not empty, that's a good sign for us.
Yeah, the one time I saw one lying on its side, that was a depressing sign. But I'm sure Ian is well
on top of it.
Is well insured for that. Which then leads me to the point, which is the what they call vehicle delivery service, which is where they originally came from, which is just under 50% of their business. Hard space to be right now because vehicle sales, I mean, we know the story out there. It's tough being a consumer. Buying a new car is not easy. Doing okay, but it's a tough space for them, and they're managing to eke it out.
And I think Ian Lawrence and the team have done a brilliant job in. A few years ago, VDS, the business you're referring to, was 85% of the profits and revenue. Today, as you mentioned, it's 45%. So they've done really well to diversify their revenue stream, and they've acquired a lot of businesses along the way that specialize in logistics, usually within a niche market. And I think that's really where they have a competitive advantage. VDS now accounting for less of the profits, but they're strong in that market, and when it picks up, they're the first that will.
They're well positioned. They also, I suppose me and you could go buy one of those trucks and drive it around. But I mean, this is specialist. I mean, I've seen Grindrod. I think I've seen Supergroup. This is very specialist in that sense. They've set up their facility in Umlaas Road. Again, if you're driving the N3, you can't but miss the giant
blue shade,
blue shed, where they can store vehicles, etc., etc. They're probably, their clients are going to be quite sticky in a sense because VDS does it well, does it properly, got long-term relationships and de-risked the business, but it grown into it at the same time. For example, Umlaas Road.
Yeah, so I think you mentioned anyone can deliver vehicles. I don't think it's that easy. What OneLogix has proven to do really well is they've actually incorporated a lot of data within this business. So they've got an income statement and balance sheet per truck, which they monitor on time, live, to run these trucks efficiently and effectively. So it's quite an advanced operation, not just merely driving the truck from Durban to Joburg.
And stopping halfway for lunch.
And stopping halfway, not at all. So they've built this business up quite efficiently, and with the Umlaas Road, that's such a strategic acquisition that they did there of that property. It's just outside the Rustic Belt, which I think is going to be quite a strategic property going forward, especially if we get more rail and less road, trucks off the road. That property is strategically located where you have a rail going through there. So I think OneLogix is definitely a company to watch even for that.
You mentioned rail, and in the latest annual report, they put rail as one of their threats. Yes. And I get their point. You know, Logix says put a whole bunch of cars on a train in Durban and drive it up to Joburg or train it up to Joburg. But to your point, there's opportunity there as well, because as you say, Umlaas has got a rail siding there. So truthfully, they could be running their own. They could be doing the onboarding on the train and offboarding at the other end.
Exactly. So I think we're quite a while from that. I mean, it's in policy. We saw it come up again last week in Cyril's policy, but I think practically it's a few years away. But I think that's one thing that this management team at OneLogix has. They got quite a long-term vision, and they can see things as they arise. So I think if that does come, I did mention to Ian Lawrence, why is it a risk? It's a risk if government goes on without them.
Fair point. Yeah, it's also they could become the last mile sort of operator in a sense. You talk long term, and I was going to come to it later, but let's come to it now. Whenever I talk OneLogix, to a lesser degree, I suppose, the Adapt ITs, people always say, secession, founder CEOs, we love them, but what happens? They're not there forever. And my sense, and you know, I first spoke to Ian probably 10, 12 years ago, and reading the annual report, they're very aware of it. They've got a CEO designate. Ian's not resting on his laurels. He's looking around at his team and say, you grow into that and you into this and you'll take my job one day. And that's kudos to a founder. That's not an easy thing to do, but hugely important.
Yeah, and I think succession planning is really important for investors. And with OneLogix, although Ian has been the front face of OneLogix, we've got Cameron McCulloch in the background, and he's actually been he's been the operator in the background, and I think that's what the investor community is not fully aware of. And likewise, I mean, within this portfolio, there are 11 businesses, and those businesses are run by entrepreneurs themselves. So while Ian might be sitting at the top, he's not doing the daily operations of each of these businesses. And I think that's also a key advantage with OneLogix. When they acquire these businesses, they leave that entrepreneur in place to do his thing, and they just plug in support for him.
And make those synergies work. I hate the phrase, but it works. They also do a lot of cross-border into neighbouring states. They've got specialised, they refrigerated logistics of agricultural products. I think that's chickens, maybe. I don't know.
So they acquired 2 businesses a couple of years ago, Jackson's and Buffelshoek, and that's added another segment to their business in agricultural logistics. And they Jackson's would transport anything from potatoes to very sensitive fruit and vegetables that needs to be transported at a certain temperature. I mean, their customers will pay up for good service, because if you're a day late, your produce is off, or you miss the shipment and you have to wait. Who knows when it would get onto a new ship. So they've acquired those businesses, and I think that's helped diversify their revenue stream.
Yeah, and again, back to the vehicles in the back of trucks, which means you couldn't do. Nice niche little businesses they can really grow into. What struck me is the revenue, and I got a slide forward. I expected to see it to be a lot more lumpy, particularly considering the last couple of years, vehicle sales, we know the story. Yet if I look at their revenue, it really is, and I'm talking, HEP's a different story, but their revenue is consistent. It's like a staircase going up, which suggests to me that they're holding on to contracts and they're managing to pick up new ones. Margins might be squeezing, but they're holding on to businesses and getting new.
Exactly. I mean, they got quite a good delivery success rate. So I think they've shown competitors that they are good at what they do, and they've managed to keep business and clients. And they've managed to acquire businesses along the way that has helped that revenue tick up slowly each year, which wouldn't have been the case had they not acquired those businesses. Because as you mentioned, VDS, the market for car sales has gone backwards in South Africa. So
if they were still VDS as they were 10 years ago, it would be a whole different story. Cash flow, very, very strong, $250 million year end. Again, buying back shares, low debt level, trading below tangible net asset value, not the goodwill net asset value. A company that really is sitting on deep valuations. Then I speak to my friends in KZN, and they all talk about the truck fires that are happening and the worries, etc. My sense is this isn't directly impacting OneLogix too much, but perception matters.
It does, and they're definitely not completely...
Yeah, they're not immune, but it's not...
They're not immune from that risk. I mean, they did have one incident with their truck at the one border. They are quite... What I really love about OneLogix is they have, even given everyone has shares within the company, even the truck drivers. So they've aligned themselves with the truck drivers and shareholders. So I think it's a different model to other trucking companies.
No, that's a great point. I think you're right. A lot of truck drivers are either sort of last resort or hires in. These are underpaid. These are properly paid and are shareholders. Unfortunately, at around 3 rand, maybe not the happiest, but they're still shareholders. That's it for this episode. So OneLogix, there are a couple of things I like about OneLogix. They've got a defensive nature to them, and that defensive nature is the specialized. They're not moving ShopRite baked beans and stuff. They're highly specialized in what they move. They've got a good reputation for it, and they're trading at a chunky discount to tangible net asset value. And Ian Lawrence is a top CEO. That said, I got to go with Adapt IT because I got to pick one, right? Adapt IT, I like what they do. I like their business. I like that they take their software to what Sam says, change the language and suddenly your software is into the continent and then there's Europe. I like the way they do their growth. They've picked certain sectors. They moved into energy a couple of years ago. It's small, but it's working for them. They don't have single client risk. And even them PE of 9, a little less on a dividend yield. But for this week, Adapt IT would be it. That's it for this week's show. My thanks to Samantha Steyn from Canon Asset Managers for helping us understand Adapt IT and OneLogix better. Tweet us at Business Day TV using hashtag SmallCapPortfolio with any guests you'd like to see in future episodes. Until next week, good night.